A small AI company just posted 68% revenue growth, while Wall Street giants are struggling to deliver double-digit gains. The stock is trading at $12. But some analysts are calling for price targets above $26. That's over 100% upside potential, and I'm about to show you exactly why this could be the opportunity of 2026. What's up, everyone? Today, we're diving deep into what could be the most undervalued stock to buy now in the AI sector. While everyone's chasing Nvidia and the mega-cap names, there's a small-cap AI company that's flying completely under the radar. I've spent the last week analyzing their latest earnings reports, dissecting their partnerships, and mapping out their growth trajectory. What I found has me seriously excited. This isn't speculation, these are real numbers from real contracts. By the end of this video, you'll understand why this stock could potentially deliver life-changing returns. Let's get into it. The company, SoundHound AI. Sound here as the company that could be the best stock to buy now for explosive AI exposure. SoundHound AI, ticker symbol SOUND. As of January 9, 2026, the stock is trading around $11.75 per share with a market cap of approximately $5 billion. But here's what makes this fascinating. Wall Street analysts have an average price target of $16.14, with the most bullish calling for $26. That's over 120% upside from current levels. SoundHound develops voice and conversational AI technology. Think of them as the company powering the voice assistants in your car, restaurant call centers, and smart devices. They're not just another AI chat, but they're building the infrastructure for agentic AI that can actually complete tasks, not just answer questions. Why now? The catalysts are stacking up. The timing on SoundHound couldn't be better, and here's why. First, they just reported blowout Q3 2025 earnings on November 6. Revenue hit $42 million, up 68% year over year. That's not slowing growth, that's accelerating growth. For the full year 2025, they raised guidance to $165 to $180 million, which represents over 80% growth from 2024. Second, they're making massive moves in automotive. At CES 2026 just last week, they unveiled agentic voice commerce for vehicles. This isn't just voice commands, we're talking about AI agents that can order food, make restaurant reservations through OpenTable's 60,000-plus restaurant network, pay for parking, and book tickets, all hands-free while you're driving. They've already secured partnerships with major automakers, including deals with Jeep across Europe and multiple of manufacturers. Third, they acquired Interactions, a customer service AI pioneer, giving them instant access to Fortune 500 companies and enterprise-level contracts. This acquisition brings $20 million in annual cost synergies and massive cross-selling opportunities. Financial metrics, the numbers that matter. Let's break down why this is potentially the top stock to buy now from a fundamental perspective. Current stock price, $11.75 per share as of January 9, 2026. Market cap, approximately $5 billion. 52-week range, $6.52 to $22.17. Now here's the interesting part. The stock hit $22 less than 2 months ago, which means it's currently down about 47% from recent highs. That's a massive discount for a company with accelerating revenue growth. Revenue performance. In Q3 2025, SoundHound reported $42 million in revenue, representing 68% year-over-year growth. For context, they did $42.68 million in Q2, showing consistency. Year-to-date through Q3, they've already generated $114 million in revenue, up 127% from the prior year. Full-year guidance, management raised 2025 guidance to $165 to $180 million. At the midpoint of $170.5 million, that's 95% growth over 2024's $84.69 million. This kind of growth in a profitable market is rare. Gross margins. Non-GAAP gross margin came in at 59.3% in Q3, which is exceptional for a software company. GAAP gross margin was 42.6%. The difference, stock-based compensation and acquisition accounting. The underlying business is highly profitable on each dollar of revenue. Operating metrics. The company reported an adjusted EBITDA loss of just $14.5 million in Q3 and guided for near break-even adjusted EBITDA in Q4 2025 at the high end of their revenue range. They're rapidly approaching profitability. Balance sheet strength. This is critical. SoundHound ended Q3 with $269 million in cash and zero debt. That's a fortress balance sheet that gives them years of runway to execute their growth plan without dilution concerns. Cash burn. Non-GAAP net loss was only $13 million in Q3, down from the GAAP net loss of $109.3 million. The difference? A $66 million mark-to-market accounting loss on acquisition earnout shares based on stock price increases. This is a non-cash item. Their actual cash burn is minimal and declining. Growth catalysts. What drives the upside? Here's where it gets really exciting. SoundHound has multiple revenue engines accelerating simultaneously. The automotive vertical is massive. They signed a deal with a large Chinese company to embed their chat AI into double-digit millions of smart devices over the next 2 to 3 years. In India alone, this represents over $100 million in potential revenue. They're also expanding with globally recognized sports car brands and multiple commercial fleet operators. Voice commerce is the game changer. The OpenTable integration announced in December means drivers can discover and book restaurants using just their voice. Add the Parkopedia partnership for hands-free parking, and you've got a sticky, recurring revenue stream that generates value on every transaction. Customer service AI through their interactions acquisition is targeting a $16 billion market. They're already deployed with Fortune 500 clients. The technology edge is real. CEO Kevin Mohajer stated their AI beats big tech by 35 to 40% in accuracy and latency. They're using their proprietary Polaris Foundation model, which delivered a threefold reduction in error rates for clients. This isn't marketing spin. Customers are seeing measurable performance improvements. Analyst consensus. Wall Street is waking up. Out of 8 analysts covering Sound, 7 rated a buy or strong buy. That's 88% bullish consensus. Price targets. Average $16.14, 37% upside high. $26 H.C. Wainwright, 121% upside. Recent upgrades. Dow Davidson at $14. Cantor Fitzgerald at $15. H.C. Wainwright upgraded to buy with a $26 target, specifically citing strong revenue momentum and expanding margins. That's a serious endorsement from a respected firm. Risk factors. What could go wrong? Let's be real about the risks. First, profitability timing is uncertain. While they're near break-even on an adjusted EBITDA basis, GAAP profitability is still quarters away. If revenue growth slows unexpectedly, the stock could face pressure. Second, competition is intense. Google, Amazon, and Apple all have massive voice AI initiatives. SoundHound needs to maintain its technology edge and win enterprise contracts against well-funded competitors. Third, customer concentration has improved but remains a consideration. While no single customer represents more than 10% of revenue now, losing a major automotive partner could impact growth. Fourth, valuation is stretched by traditional metrics. At a $5 billion market cap against $180 million in annual revenue, that's roughly 28 times sales. This only works if growth continues accelerating. Any revenue miss could trigger significant volatility. The stock has a beta above 2, meaning it's more volatile than the market. If you can't stomach 30 to 50% drawdowns, this isn't for you. The 52-week range of $6.52 to $22.17 shows how wild the swings can be. Why this could be a 1x opportunity. Here's my thesis. If SoundHound executes on their $165 to $180 million in 2026 revenue and reaches $300 plus million by 2027, very achievable given current growth rates, then applies consistent 50 to 60% gross margins while reaching GAAP profitability, the market will re-rate this stock significantly higher. Right now, you're paying about 28 times sales. That's expensive. But Palantir trades at 65 times sales. Snowflake trades at 10 times sales. If SoundHound proves it can scale to $500 million in revenue by 2028 with improving margins, a $50 to $100 billion market cap isn't unreasonable in a bull case scenario. That would be 10 to 20 times from today's levels. The automotive market alone represents 90 million vehicles sold annually. If SoundHound captures just 5% with $20 to $30 per vehicle in annual software revenue, that's $90 to $135 million in automotive revenue alone. Add customer service AI, IoT devices, and voice commerce, and you're looking at a multi-billion-dollar revenue opportunity. Here's a trading strategy I am considering: dollar cost averaging into a position over the next 2 to 3 months. Given the volatility, buying 1/3 of your planned position now, 1/3 on any dip below $10, and the final third after Q4 2025 earnings in late February could help smooth out entry prices. Set a 5 to 10% portfolio allocation maximum. This is a high-risk, high-reward play. Never bet the farm on any single stock, especially one this volatile. Remember, all investments carry substantial risk. Past performance doesn't guarantee future results. SoundHound could fail to execute, face unexpected competition, or disappoint on revenue growth, causing the stock to decline significantly. This is educational content, not financial advice. I am not a financial advisor. You must do your own research and consult with a licensed financial advisor before making any investment decisions. Never invest money you can't afford to lose. Growth stocks like this can lose 50% or more of their value quickly. So there you have it. SoundHound AI could be the hidden gem stock to buy now before Wall Street fully wakes up to the opportunity. Accelerating revenue growth, massive addressable markets, strong partnerships, approaching profitability, and a fortress balance sheet, all at a 47% discount from recent highs. The risk-reward looks compelling if you can handle the volatility. If you found this analysis valuable and want more deep dives like this that could seriously upgrade your portfolio, smash that like button and subscribe for weekly stock breakdowns. Here's my question for you: are you buying SoundHound in 2026, or do you think the risks outweigh the potential rewards? Drop your thoughts in the comments. I read every single one. See you in the next video.